John, what do you make of this BHP story?
Yeah, well, there's really two things in the market today, I think. Tom Orlick and Aaron Back have a really good story on this on WSJ.com right now. One is what you're describing, which is that BHP Billiton says, look, it looks like iron ore demand in China is flattening out. China has predicted that it wants its economy to slow down a bit. It saw some overheating, some bubbles developing in various asset classes, including real estate. This is kind of all sort of part of the mechanism. The concern has been, are they going to be able to control it? Is it going to be a hard landing or a soft landing? And so far, it seems like, once again, China has managed to manipulate its economy down without having a hard landing so far. But the BHP warning kind of scared the markets. Iron ore demand flattening, that's a concern for commodities.
Yeah, now, and Mike, you've been on this story too. I mean,
in fact, John and I talked about the very issue yesterday on Main Street.
Is this really just a short-term concern? Is this a long-term concern? What is BHP really saying here?
Well, actually, Ian Ashby, the CEO of their iron ore division, I met with him about a year ago when I was in Australia. And what was interesting to hear from him at that time was the long-term projections that BHP has. And so you've got to put it in the context. Yes, they're seeing, you know, a downturn from this spectacular demand growth that they saw for their product for the last couple of years. But their long-term projections for China are based on these kind of models that look at industrialization and say, well, what happened to the US when it industrialized? What happened to Japan when it did? And steel, of course, is a big function of industrialization. So they're seeing that and they're saying, we don't see really, China's going to keep buying this stuff for the next 25 years, and you're going to see, you know, 8%, I don't know what the numbers were precisely, but you're going to see this very steady growth. And so the long-term picture for BHP and for any other iron ore producer is still very, very strong if those assumptions are correct, right?
Right.
Yeah. You know, I mean, there's a lot of questions about China. Can China actually make this transition without some sort of, you know, big blow up?
Now, John, you know, it's interesting. When you talk about the U.S. and China, you talk about the first and second largest economies in the world. But to my thinking, they're very different economies. You know, there's an old saying that when the U.S. economy sneezes, the world catches a cold. Should people have the same concerns with China? Because China's certainly not a major consumer society right now, are they?
Yeah, I think that the world has kind of gravitated to that concern because increasingly China is still way beyond the U.S. in total share of GDP globally. It's slowly advancing. And you're seeing that also in the markets today, I think. Wen Jiabao came out with an article in the state-approved press and said China needs to move toward interest rate liberalization. Well, what does that mean? Well, that means that it wants to actually reward consumers for saving more than they reward them now because there's a cap on what banks can pay in interest to consumers. And consumers have been getting hurt. They're getting paid interest at a rate below inflation. So you have an economy where the economy, GDP, 33% of that is accounted for by consumer activity, 70% in the U.S. So compare those two. If you liberalize in Japan and free up that consumer to spend more, you're talking about a very mighty engine behind the next phase of growth for China.
But then, John, we move to an even greater force of this scenario Paul was talking about, where China becomes the economy whose health we worry about more than ever, right? For now, we worry about commodities being affected by this, and commodities seem to be one of the big growth areas, and therefore it's a legitimate concern. But if in fact we get to a consumer society there, it's manufacturers of the world everywhere are going to be concerned and singularly focused on China. That sounds like an odd and somewhat sort of scary scenario in itself. Of course, it's better.
Yeah, I think, Mike, you're right, and particularly since we don't have anywhere close to the transparency into the Chinese economy that we do into other liberalized economies around the world. So Wen Jiabao is trying to get there, but in that road to getting there, there's going to be a lot of bumps, and we're not going to be able to predict those bumps because we're not going to be able to tell what's going on inside the Chinese economy because the data is so opaque.